It's important to think differently inside financial markets. The reason that I overlay Bitcoin's price action here is that it gives us an indication of when the main markets will turn around. We saw recently that Bitcoin was spiking, and look at what's happened since. The key to understand this is happening on a global basis. Bitcoin spiked up, indicating there was increased risk-on activity and interest inside global markets, not just the US markets, also Germany, Japan, Australia, China, the United Kingdom, Russia, Taiwan, Singapore, India, Switzerland, Canada, and France. Bitcoin is really important. It's an incredible risk-on or risk-off indicator. Tier 1 is where Bitcoin's chart belongs, and you can see why it's important. It's also important to keep your eye on the DXY. Foreign exchange or FOREX is a very powerful way to understand if the stock market is going up or down, how commodities are moving, and also how crypto is moving. All financial markets are intercorrelated and interdependent. The economic system globally works as one unit. That's exactly why all markets are intercorrelated and interdependent. Many people just look at the chart that they put money into. If you want to be very successful, look at other charts. The best charts that you can look at are the Tier 1 charts. Simply understanding their movement is in fact a game changer for your profitability and of course your peace of mind. Keep a very close eye on the composition and movement of the Tier 1 charts. It is a game changer. The S&P 500 is a Tier 1 chart. Let's have a quick look at that now. Looking at the S&P 500 over the last trading session, we can see that smart money bought the S&P 500 up. But will it continue? To answer this question, we need to know where smart money is buying and selling. That is, we need to know where the SLs are, or the Stanfield levels. In yesterday's video, Meditative Mind reached out and said, "Can your Twitter call on Wednesday night about Bitcoin price surge? Borsog, buy on red, sell on green. SLs should be GSLs, golden Stanfield lines, they are gold. A license to print money. Thank you very much, MM. Great to see you, my friend." Where are these mythical SLs? They're just in the indicator, which is part of the monthly service. You can see that there was a structural resistance line at 43.14 when the S&P 500 got caught by all these safety nets. It managed to put in a rally, and we saw that risk-on activity just emerge from Bitcoin before this happened. We were already waiting. One thing that this shows us, we have structural resistance just overhead. We must pay attention to this. We've sought to consolidate around this 42.92 area, but unless we can break through this overhead structural resistance, that means it's down we go, so there could be limited upside here. We just need to keep our eyes on these key structural levels. The NASDAQ is an important Tier 1 chart. Let's have a look at that now. Stacking probabilities is vitally important. All charts are intercorrelated and interconnected. Therefore, if we see the S&P 500 come up to resistance, we would expect a similar thing in the NASDAQ. But if this is not the case, the tech stocks could rally. From yesterday's video, Sanjeev's comment, FUD, fear, uncertainty and doubt, doesn't exist for me because I've seen the way SLs work. I know price will be caught somewhere within structure. If I'm afraid my order sizes are too large. FOMO, fear of missing out, doesn't ever exist because I've seen price moving in waves so many times. Look at the blip up and down on Bitcoin. In yesterday's video, price will come back down and you'll get that order filled. Thank you, Sanjeev, for sharing. We saw that the S&P 500 was coming up to resistance, but what is happening with the NASDAQ? Ooh, this is interesting. Risk-on activity is clearly into the financial markets, but what happened with the NASDAQ? It's come up through one very steep and very strong level of structural resistance around that 13,205 mark, and another one around that 13,256. It's seeking to create consolidation, but it's a little bit weak. Therefore, we're stacking the probabilities that the NASDAQ could retrace further. Where is the next structural level of support, like what Sanjeev was talking about? It's at that 13,100 level. But always do your three-dimensional risk management. Know what you will do if price goes down, goes nowhere, or goes up. When seeking to understand strength in the S&P 500 and the NASDAQ, we can have a look at Apple, which is a Tier 2 chart, and stack probabilities. Let's do that now. Apple is an incredibly important stock. That's why it's a Tier 2. Is Apple under support? Is there a lot of support below it? Or is it coming into smart money resistance? This is a very important question to answer. Before we pop on the SLs, Wabi Sabi from yesterday's video had a great comment that I wanted to share with you. Before going into a trade or investment, Wabi Sabi defines the goal. For example, if you want a 3%, 5% or 10% trade, keep that in mind as your goal. Price is always moving in a wave, so there are many variations and permutations of how a trade or investment might play out, and that can affect you psychologically. Wabi Sabi says, when you define your goal clearly, there's a lot less noise. What I've said might be very obvious, however, it took me some time to learn, so I hope this helps someone out. Thank you, Wabi Sabi, very kind of you, my friend. Defining your target percentage is really good advice. When we throw on the smart money resistance lines, what do we see? At that 171.66 mark, Apple is coming into smart money resistance. It's also found a safety net at smart money support around that 169.42 level. Because this is quite substantially or a strong smart money sell level, we might find that Apple follows the NASDAQ and the S&P 500 and retraces. Now, the active learning question, if that happens, what could happen to Bitcoin? And you might say, Ken, I couldn't care less what happens to Bitcoin. But as we saw at the start of the video, it really matters. It matters globally. You might be in crypto and you haven't looked at Bitcoin, and you might be really surprised how powerful Bitcoin is as a predictor of your favorite or your beloved alt's price movement. We have a rule inside the masterclass: no alt can escape Bitcoin's gravity. It's very important to understand Bitcoin. To prevent fear and anger from guiding your actions inside financial markets, it's important to do your three-dimensional risk management. Know what you will do if price goes against you, goes for you, or goes nowhere. You are always paid for your synchronization. Synchronization that you get from stacking probabilities and knowing structural levels and getting out of Zone 1 and Zone 2 into Zone 3 and Zone 4. Stacking probabilities and seeking confirmation is really important. Microsoft can give a lot of light into the terms of the strength in the S&P 500 and the NASDAQ, and that of course impacts everything else. Let's have a look at Microsoft. Looking at Microsoft and popping on the monthly service indicator, we can see that there's structural resistance just above at 314.70. There's structural support at 312.72, and you can see that Microsoft closed out at 313.66. We need to make it above this structural resistance level in order to go higher. If we don't go up, we're going down. And where are we going down to first? Of course, this structural support level, and then the lower one if it continues on. We know the price is always moving SL to SL. If it's going up, it will move to the next SL. If it's going down, it will move to the SL below it. It's a very simple rule, but also tricky when it comes to the application. The truth is, you can make an absolute fortune selling in between SLs, buying at one SL and selling at another, buying and selling, buying and selling, buying and selling. Mastering fear is every trader's and investor's focus, but they don't know it. It takes decades inside financial markets to understand this simple fact. Your level of fear dictates your profitability. People with extreme fear exhibit extreme nastiness, extreme blame, and extreme conflict, and also, unfortunately, extreme losses. There's a lot of probabilities we need to stack, but ultimately we must control fear. If fear is not controlled, you could have incredible opportunities, but simply will just remain frozen. Because opportunities occur at the maximum point of fear. At the maximum point of certainty, you frequently lock yourself in to ongoing losses. These are very difficult lessons to learn. That's why focusing on Zone 1, Zone 2, Zone 3, and Zone 4 is critical. But what is that? When we go through the charts and stack probabilities, we're getting ready to pull the trigger on a trade or investment. But the concept is, it depends on what zone you're in as to how easy or complex that is. A lot of people get caught in analysis paralysis. They can't place an order. You can have all the knowledge under the sun, but if you can't actually place that order, that knowledge is not effective. Now, what stops people from pulling the trigger on a trade? It's fear. Inside Zone 1 and Zone 2, these are the fear zones. People want certainty. They want to be absolutely positive that they will not lose money. This creates absolute terror because price is always moving in a wave. In Zone 1 and Zone 2, the panic and the blame zone, people get really angry. They get angry at themselves and angry at other people. In Zone 3 and Zone 4, we look at things very, very differently. We only have ourselves to learn, not to blame, to learn. Financial markets will always give you losses. That is what financial markets do. You cannot avoid them, but you can learn from them. And that's exactly what professionals do. They understand there is no certainty. There's the stacking of probabilities. And you need to look far and wide to stack as many probabilities as you can, to get as safe as you can. Only looking at one chart allows you to stack one probability. And that probability may absolutely be meaningless. Why is that? How could I say that? Ken, how could you say that? Because the chart that you may be looking at could be altcoin number 20,100. Just literally irrelevant to the crypto market as a whole. The key is to look at Bitcoin, because no alt can escape Bitcoin's gravity. Inside Zone 3, we have a lot of different ways of thinking and maneuvering around financial markets. Zone 3 is what's taught inside the masterclass, and Zone 4, mastering fear, is the most important thing anybody can ever do. Anytime people exhibit anger or conflict, they're stuck in Zone 1 and Zone 2. Unfortunately, this is the lose money rule zone. It takes time to understand. To get out of there, we must first focus on ourselves. And we need to learn what the market is teaching us. The foundation of Zone 4 is positive excellence. The foundation of Zone 1 and Zone 2 is negative excellence. Positive excellence, the main focus is kindness. Kindness to yourself and kindness to other people. Why is this important, and isn't kindness some form of weakness? In Zone 1 and Zone 2, many people think kindness is weak. But kindness is never weak. Kindness is strength. It means you're independent of the market and independent of other people. And why is that strength? Because you're simply not being puppeted by other people's emotions. This is really important because when it comes to placing a trade or investment, as Wabi Sabi said, you need to know your target. As Meditative said, and others have said, it's really important to know the SLs, to know the structure. Inside Zone 1 and Zone 2, people do not know the structure. They do not stack probabilities, and they get very angry when they lose. But inside Zone 3, we learn from the loss. The loss becomes a lesson, and we call it a losson. Markets are always teaching you lessons. We have the ability to learn from it or ignore it. If we ignore it, it will just come back and bite us more severely next time. But with positive excellence, we can be kind to ourselves and we can embrace the loss and create a rule from it to help protect us in the future. Purpuratum has very kindly offered a CTKS partial masterclass scholarship, and you can apply for this in the link in the description of this video. But what is the masterclass? You can learn the CTKS method for yourself visiting cryptotechnicalanalysis.org, and if you go to the testimonials page, you'll see that there's a lot of people who absolutely love the CTKS method. There's just far too many for me to go through and show you one by one, but it gives you an idea of how much it's helped various people. The link to the CTKS Masterclass is in the description of this video, and you can also reach out to the official ambassadors. The ambassadors can help you out and answer questions. They can also give you a discount code for the Masterclass. The DXY is a Tier 1 chart. Let's have a quick look at that now. The DXY is an incredibly powerful chart to look at. That's why it's a Tier 1 chart. Many thanks to someone you know. Very kind comment. Smash that like each and every day, folks, please. Let's support Ken and Kate for all their hard work that they do for us. Thank you, my friend. And please smash that like button. That's awesome. And if you're not subscribed, please subscribe and become part of our global family. We can use the CTKS method monthly service indicator to determine what happened with the DXY. We've been tracking the DXY very closely. We understood that there was a lot of structural support below this area, that 106.1080, but there was a pretty fresh air gap up to the next structural resistance at 106.4488 and higher at 106.7236. We can see the DXY couldn't maintain its upward momentum. This level, structural level, was just simply too strong. It rejected. When it rejected, it didn't hold this structural support level. It came down and came down hard, tried to retest and resume down. The thing that we note right now is that the DXY is encountering structural support. Structural support for the DXY, structural resistance for the S&P 500, the NASDAQ, Apple, Microsoft, and others. Ouch. Also, make sure that you keep an eye on the Tier 2 US 2-year yield. What happened there? We saw the 2-year come up to a structural resistance level at 5.1575. It rejected it and it's come down to structural support levels. Bitcoin and crypto are very sensitive to yields at the current time. We can see Bitcoin going up as the US 2-year yield came down, and this happens a lot. Also, make sure that you look at the US 10-year yield, and if you have the indicator, you'll know that there's a lot of structure under here at the current time. Bitcoin is vitally important to understand in terms of risk-on or risk-off sentiment in the S&P 500, the NASDAQ, and the DXY, and so much more. Let's have a look into Bitcoin. Because Bitcoin and crypto is so incredibly yield and risk sensitive, it's also DXY sensitive. We can use it as a forward indicator to stack probabilities of turning points inside the market. Let's have a look where the structural support and resistance levels are on Bitcoin. Zooming in, we can see that 26,891 is a strong structural support. If that gets retested and we resume off that, that could mean that the S&P 500, the NASDAQ, and the major stocks are going to rally through resistance. But if we start to lose it, we'll come back to the next structural buy area. These are safety nets. In a lot of market volatility situations, you must know where the safety nets are. If you don't know where they are, you just think the price is going to zero. For example, the price in Bitcoin sped up here, but it couldn't break through this 26,891 level, but it's done so now. But the concept of is when it sold off so harshly, people would say, oh no, Bitcoin's going to 10,000. No, it's going to an SL. Understanding where the SLs are just gets you out of zone 1 and zone 2 thinking, and it's easy to slide back in there. We've seen Bitcoin and crypto come up, and they come up very nicely in alignment with what's happening inside the main markets. A lot of people will say Bitcoin rallied because Gary Gensler denied an ETF application. Oh no, that doesn't work. That should drive price down. The charts always lead the news. That's why if you know how to effectively and professionally read charts, you're already ahead of the news. The news is always backwards looking. The news has to occur, but the charts price things in. The greatest gainers, past 24 hours, top 100, Comp, Rune, Aave, Arbitrum, LDO, APE, GMX, and ICP. The greatest losers, top 100, Gate Token, Lunacy, Leo, Monero, Pax Gold, Tether Gold, XDC, and USDP. It's very nice to see the crypto market go green, and we can see Bitcoin is up 2.68% and Ethereum 3.41% up. Looking at DeFi, Compound is absolutely leading the way. What else is looking really interesting today? Rune is doing very nicely. NFTs have been out of favor for a very long time. It's good to see a bit of positive momentum inside that area. Turning to liquidations, we can see that there's been nearly 75 million in total liquidations across the past 24 hours, and the majority was short liquidations, which push price up. Across the past 12 hours, we've had a lot of short liquidations and a few long liquidations. When you get a long liquidations, it pushes price down. What about 4 hours? The majority short liquidations. And we can see the shorts are continuing to get liquidated, especially on Solana. We've covered a lot of ground in this video. It's vitally important to know your structural support and resistance levels across the Tier 1, Tier 2 and Tier 3 charts. And please note, prices are going up on the CTKS method from the 1st of next month. It only costs $1.30 per day to get 27 TradingView indicators, the indicators that I use each day to show you the levels. There are also 27 videos inside the CTKS method service that explain how structural resistance and support works. If you're serious about making profit, I would urge you to get a membership inside the service, because it's a foundation membership, which means the price does not go up. There's very little time left. If you want to jump on it, please jump on it. Foundation memberships, once closed, will not be reopened. Knowing the structural levels acts as understanding where the ceilings are and where the floors are. If you get a big bolt up in price, you know where the ceilings are. If price falls climactically, you know where the floors are. That helps you to apply Rule 252, prepared and not scared. A lot of people will be attracted into the markets right now because they feel certainty increasing, but we know the S&P 500, the NASDAQ, they're under resistance. This is being reflected out on stock market charts such as Apple and Microsoft. The DXY is coming into support. Mastering fear is critically important. You master fear by every day showing kindness, integrity, and gratitude, not by showing anger, aggression, and conflict. Anger, aggression, and conflict will lose you money. It'll lose you friends. It will lose you jobs. It will lose you partners in the real world. But in the financial world, it will make you suffer undeniable losses. It's just not worth it. Many people get angry because they can't make money inside financial markets, never understanding that it's the anger that's causing the losses. This is why inside the CTKS Creed we say, I win or learn and never blame. Blame is the foundation of anger. Anger is just a way of forcing the lesson onto another person, but the other person can't do anything for you. You can only do things for yourself. That's why we never let a problem beat us, because we solve it with positive excellence. That is, we let kindness in first. Being dedicated and committed is incredibly important. And please note, if you're going through a life pullback at the moment, you're getting set up for your next life rally. Life pullbacks can be absolutely brutal. Take comfort in knowing that brutality will transform itself into strength, strength that you need for your next life rally. Inside the CTKS Global family, we understand that better habits create a better life, and a better mind creates better outcomes. All results come from the mind. Finding the way out of Zone 1 and Zone 2 into Zone 3 and Zone 4 should be the primary focus of every single person in financial markets, but unfortunately, it's not. What typically happens, people only understand this after they've become profitable, but it can take decades for that to happen. I'm coming up to nearly 40 years inside financial markets. If only I had have known this at the start, it would have saved me decades of frustration and blame. Everybody goes through Zone 1 and Zone 2. Nobody's special. Nobody circumvents it. That's why if you're feeling negative or angry against the world, it's okay, but the key is to get out of that area. Because there's no profitability there, there's no meaning there, and no happiness there. And after all, life is all about being happy. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.